Welcome to September 16th, 2024. Reno housing market updates. This applies just to stick-built single-family residences. I've been seeing some of the employment data come in. We are starting to see more unemployment kick in. Those are the kind of things I was wanting to see before drawing conclusions about the rates dropping, because the last time when people were talking about it, there was a lot of strong employment still. That is now starting to change, so we'll see. It's coming up. By the time I do another report, we will know if the rates drop down. But I want to remind you about mortgage markets. They don't follow the federal funds rate. So just even the news alone about rates going down and the probability of people's surveys saying that rates will go down, the mortgage markets have already moved. So if you're waiting for rates to go down, know that they've been going down. They've been going down now for about the last month. Actually, last week was one of the lowest times in the recent year that we've had the rate that we've had. So just know that the bond markets move in real time. They move based on news and speculation and trends. It's not like the federal funds rate. So just remember, if you're waiting for the federal funds rate, keep an eye on your mortgage rates. They're already going down in anticipation of what the odds are saying. Let's dive into the market. So right now, median sales price $565,950, up 6%, 6.4% from this time last year. Also notice about the downward trend. So that is kind of interesting because we've been kind of on upward trends for a while, but if you kind of see right at the beginning of October of last year, see how it kind of stayed level and started going down, but barely. Right now, we are seeing prices go down a little bit. Now, all of those things will contribute to the inflation reports. I know other states have been having declining rates for longer than us because this summer, our summer stayed really strong and prices continue to go up. Some states did not do that. Some states, the prices went down. Right now, you can kind of see in the starting of August that we are seeing kind of a downward trend in prices. Not a lot, but, and it's still up from this time last year, so do remember that. But it's actually one of the bigger decline paces that we've had in a long time. You can see since 1, 2, 3, 4, 5, 6, 7, so about 8 paces, 8 weeks in a row, we've had a downward trend in prices. Does that mean the market's crashing? No, it doesn't. There's no houses for sale compared to the population of our areas, so don't get into that. But are we into some seasonal softening, seasonal trends? Maybe. It is starting to look that way. And we talked about last session that our seasonality starts to come to an end about mid-August because that's kind of when school starts. So all of those things are going to start taking play. But it is interesting to see kind of that downward trend. Could it be because nicer properties, more expensive properties are leaving the marketplace? So now the median range is starting to get lower? Who knows? I will say in individual markets, individual neighborhoods, especially in the average prices, say 450s, 550s, and 600s, we're not seeing sold prices go down. We're seeing a lot of price reductions, but I think that's more because sellers have been pricing their homes on the anticipation of a pretty strong inclining market, which is not the case. So just be aware of that. Homes are selling really quick. I mean, we just put a home into contract that's only in the market for 5 days. So the market is still moving quick on correctly priced homes. But if homes are overpriced, then they're sitting. You have to be priced correctly if you want to find a buyer in today's marketplace. Let's talk about closed units, closed sales. So we're currently at 50 right now, about the same as this time last year. You can see we've kind of plateaued since about April, kind of course, the back and forth because I use weekly data, but you can see the trend's been about the same. Now, it could look like we're going on a little bit of a downward trend, but I'll show you pendings here in a moment. I'm going to call this kind of level right now. We need to see about a month or two's of data to see if there's a true trend happening right now. But right now, I'm just seeing a lot of back and forth, staying pretty level, anywhere between 50 to 60 or so units per week is about what the Reno market is selling. And this is why I'm saying not sure yet. Let's look at pending units. This is the real-time activity in the marketplace. And it's actually some of the highest that it's ever been. So if you take a look at 2 weeks ago, it peaked out at over 70 units. That was the 1, 2, 3, 4. That was the 5th highest week in the last year. So that means it was the 5th most active week in the last year of real estate. So the real estate market's really, really active right now. Remember, this is real time. Pending shows you what's happening today. If you're an active buyer or seller in the marketplace, what is happening? The market is moving. There are a lot of folks buying and selling homes right now relative to what it has been. Normally, we're starting to wind down in terms of transactions. Not the case. It's the 5th busiest week of the year. A lot of that could be just from the backlog of real estate that we need, right? We have so many folks moving here and living here, but our transactions have been lower than it has been in the last 10 years, yet our population's grown. So we're going to start having a backlog of units. It's going to take a lot of time to really catch up and balance on supply and demand in our local marketplace. And remember, I was just mentioning before that rates have been going down in speculation of the Federal Reserve rate. So that's making more affordability, and lenders are telling their buyers this. So buyers are out looking in the marketplace because affordability is actually improving right now compared to what it has been. That's the proof of the pending sales. It's a really, really active marketplace right now, unseasonably active. Jumping over to days on contract. So this kind of overlaps the thing I was talking about with a lot of folks are overpricing their properties. You'll see a lot of price reductions in the marketplace right now. And a lot of people think that's because the market's going down. Well, there's definitely some trend lines that suggest there's some sales prices softening a little bit, but it's really more so that the seller's marketing strategies are on a trajectory that's on an inclining marketplace. And when you're in a level marketplace, or even if the data suggests a little bit of a softening marketplace, then you're going to sit. You're not going to sell. The market does not aggressively offer on properties. They will wait for a seller to reduce their price to a comfort level that they want and then make their offer. So properties will sit. So this is kind of what you see right now about the increase of days on market. A lot of folks are overpricing their homes and then having to come down on price to find that correct top dollar market value. That strategy takes time. If you price correctly, then you'll sell in a week or two. But if you price incorrectly, it can take time for you to find that correct price. But once you find your price, you'll find that your home goes pending in a week or two. So overall, about 3 to 4 weeks. I was saying about 3 weeks earlier on, and earlier market reports were bouncing between 3 and 4 weeks. But you can see it's about the same as last year. We're about 24 days on the market last year, 26 days on the market this year. Jumping over to active inventory. This gives you an idea for sellers in the competitive market space. Also buyers, your selections of homes. Take a look at the last year. This is the largest selections of homes that buyers have had in the last year. So that's really helpful for buyers and why you see a lot of increase in pendings. Their selection has increased. There's more options available to them. Combined with the lowering of mortgage rates, which have already been happening over the last month, that makes for affordability to improve and people get active. So right now, if you're a buyer, this is the most homes you've had to choose from in the last year. If you're a seller, you do have a little more competition, absolutely. But if you're priced right, you can see by the pendings, buyers are out there, buyers are buying homes. We're up in inventory about 8% from this time last year, 690 units available for purchase right now versus 639 from this time last year. Lastly, new inventory. So we're holding pretty steady right now. We're not seeing a downward trend in inventory just yet, which is great because with the interest rates going down, I think a lot of buyers don't want to get out in the marketplace because they've been waiting and waiting to have some level of affordability within their means. These lowering interest rates are helping. Been lowering for the last month now in the mortgage markets. It's been holding pretty level. So that's going to be really helpful for the fourth quarter market as well as the third quarter market. A little too soon to talk about next year's marketplace with this data, but it's going to be nice because it does give some selection to buyers who are out there looking. And I do believe that we're going to have a very unseasonable behavior with the fall and winter months because of the financial markets. I do believe that as everything starts to calm down and we go into a new market cycle, we're going to see more transactions in the marketplace. We've been at some of the lowest times in recent data of how many transactions are buying, yet our population is growing. That means a massive backlog of buyers wanting to own real estate. And I think as soon as the financial markets hit their thresholds and their guidelines, they're going to want to get out and going to want to start buying. So I think that's going to be really an active marketplace. Of course, if we have ice, that's a different story. But if we don't, I think it's going to be a very active winter and fall marketplace compared to a normal season. And right now it's nice because new listings are holding steady. So we're adding about 80 to 90 homes in the marketplace. Look at this time last year, we were already dropping pretty steadily. But yet right now we're holding level. We haven't had the downward trend yet of seasonality. And I hope it's just because sellers realize that things are changing right now. So they could start getting good prices in the marketplace. And people are out there buying homes or they need to sell and move. So we're finally making that change to sell so that they can buy within their means. Overall in the marketplace right now, a little bit of steady decline in median prices. That can happen either just because of the softening of the market or more expensive homes have left the marketplace. We're not quite in the seasonal downward trend yet that we usually are. And we're not sure if we're going to see those traditional seasonal calm downs because of the interest rate markets. We are getting ready to enter a new market cycle overall in the real estate market and all markets. So we're not sure how that's going to behave. Are we going to be more active in quarter 3 and quarter 4 than we normally are? It's possible, especially as affordability increases, buyers might enter the marketplace during the winter months, during the fall months, and into the early spring months. So I know our team is anticipating a lot more activity than we have seen in the last 2 winters of real estate market, especially as affordability improves. So keep an eye on activity. If you're out looking right now, you have the most selection you've had in the last year. And if you're a seller right now, think about affordability. If you're moving somewhere, it might make sense for you to make that change now because now your mortgage is starting to pencil better than it has in the last 2 years.